Hi everyone, welcome back to the Strategica channel. My name is Lerato Skansi, your investment and financial advisor. For any of you who are new to this channel, we are here to share everything that has to do with your personal finances, your debts, your investment, and everything about your money. So do remember that Strategica is a licensed financial institution by the Central Bank of Lesotho. And if you do need professional advice, do seek our assistance, and you can contact us in the contact details that we'll leave down below. So today we are going to talk about something that I think a lot of us have been, exposed to. A reason being that in recent months post the COVID era, we have had interest rate hikes almost every single quarter when the Monetary Policy Committee, or MPC in short, sits to review its monetary policies. So we have seen this week actually the Federal Reserve, which is in the US, and the Bank of England have increased the interest rates by 0.25%. And most likely the South African Reserve Bank is sitting as well next week, and we are definitely going to see an interest rate hike from them as well. So Lesotho, which will be sitting on the 4th of April, we are bound to see an interest rate increase. So what does this mean for you? Increases in your loan installments. So all of you who have interest linked or prime linked loans, you're probably going to see an increase in your loan installments. So for most people or other people who are lucky, if I may put it like that, but it depends. So you have other people who are on fixed interest rate loans. So please do take note that if your loan contract actually says that you are charged a fixed interest, you will not be affected by these changes. So do go back to your loan contract and just check that section that talks about interest rates, and then you'll see if you are prime linked or if it's fixed rate. So for all of you who are actually prime linked, you have your loans being prime linked, so you're going to see that increase in your loan installments. So sorry about the lighting. I can see that the sun keeps on going, keeps on coming out, and and the clouds again. So it's pretty bad today. So after watching this video, I want you to be in a position to actually be able to sort of estimate what the impact is going to be on your monthly loan installments after that interest rate hike or that interest rate increase. So for us, we know that we'll have a CBL rate increasing, and that is going to impact our prime lending rate. And as we have said, our prime lending rate is actually the CBL rate plus 3.5%. So please be on the lookout for that. We will be posting as well on our different socials when that increase actually happens, so that then you can quickly go to a template which we will be sharing in the link down below as well, so that you can then just do a quick calculation to estimate your installment. So with that, let's go straight into it. Hi everyone, welcome back to my computer. So like I have said, we're going to have just a brief example as to how this is going to, how the interest rate hikes actually are going to affect your loan installment. So I have assumed that I took out a 200,000 Rand personal loan, and I chose this particular loan because I know it is the most popular one that people tend to take out. So I took 200,000 beginning of January 2023. So the first installment went off my account end of February. So given that it is a 3-year loan, which is 36 months, that's the 200,000, and my current interest rate is actually prime, which is currently 10.75 plus 10%. So the 10%, as I have said, it is the risk factor that the bank actually charges over and above the prime lending rate given your credit worthiness. So the least or the more uncredit worthy you are, the higher that factor loading is going to be. But if I was more, let's say I'm very good at paying off my debt, I don't have any bad credit history, that would probably be a lower. So I have sort of assumed an example which is far much more on the far end of the spectrum, where we are looking at someone who is not so good with their finances. So then that means that the current installment on the loan is actually around 7,509. So what happens is, like I have said, that we are expecting interest rate hikes, and as we have seen in the US and the UK, the hike has gone up by 0.25%. I have assumed a similar interest rate hike. So by assuming that interest rate hike, then we find that as per my loan statement at the end of February, my closing balance or my outstanding balance on that particular loan after that first installment is actually 195,949. And then since I've only had one installment go off my account for that payment for the loan, it means that I still have 35 months remaining in order to pay off this particular loan. And then the prime lending rate is going to go up by 0.25%, which means my new interest rate is now 21%. The new installment then goes to 7,534, and that gives me an effective increase in my interest of 25.24. So like I have been saying, this is just a general example. So for someone who has more than one loan, for instance, or more than one obligation that is actually prime linked, you would come in here, probably put in the first one and then the other one, so that then you can actually get the overall increase in your installments when it comes to your monthly obligations that are actually prime linked. So this is what you would use then, or the template that we are actually going to leave in the link down below, so that then you are in a position to calculate your own increases in your installments even before the bank actually makes that deduction. So this will help you in terms of planning your finances and making sure that you're ready for those interest rate hikes. So in closing, I would like to say that the template that we just shared is just an example, and the figures that we've used will differ depending on your particular situation. So the type of loan, you will see that for your car loans or your mortgage loans, you would have that interest rate being much lower than what I have shared, which was a typical range for a personal loan. And you will also have see that the months remaining when it comes to your home loan is much higher than your car loan and your personal loan, because that the mortgage loan is normally paid between 10 to 20 years, which is around 120 to 240 months. So everyone's situation will differ. So if you do need help, do post questions, and then we'll see how we can assist you with using this template. But do remember, guys, that when it comes to interest rate hikes and the increases in our installment, we are always trying to make sure that everything is still within our budget and we can still afford the credit that we have taken on. And this is actually a different story. It was a different story actually 2 years ago, when interest rates were going lower because of COVID, and central banks were trying to stimulate the economy, and the rates were just decreasing and most of us took out loans. But given recent increases that have gone up by almost 2% in the past year, it means that our loan installments have actually been impacted. So the scenario we've shared is just one example for one actually hike that we are probably expecting in the next 2 weeks or so, when the MPC meeting sits in Lesotho, and in other areas like we've said in the UK and the US, they are already experiencing this. So do remember again that our loan installment or the outstanding balance on our particular loan gets calculated every single day, as the interest is also calculated on a daily basis. So that figure changes daily. So the answer that you're going to get from the template will be a rough estimate based on your loan statement from the previous month, but it will give you a good estimate as what to expect when the interest rate hikes hit. So do keep this in mind when you're completing the template, that the figures might not be exact, but they'll give you a good estimate as to what to expect. And thank you everyone for watching, and I hope if you found this useful, you'll share it with someone that will benefit from it, and do hit that subscribe button as we'd like to grow the family. Hit the notification bell so that whenever we have or we post such good content, that you will be notified and have the first row seat to this wonderful experience. See you next time, and thanks for watching.